edition of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget, you can listen to us anywhere in the world on TFNN.mobi on your mobile phone. Let's check out where the markets are at. Right now, we got the S&P is currently down 7 points. We got the Russell down 6, the Nasdaq down 7, the Dow down 67 points. Oil is currently down $1.40. So a nice big move on oil on down there, but a pretty crazy wild volatility to be expected on oil inventory day. Always a tough day to trade oil. Looking on over at natural gas, it is up about 0.75%. We got corn is up 1% on the day. We got soybeans up 1.5%. That's a 19-point move over on the soybean market. Euro dollar is currently down 42 pips, Aussie dollar down 49 pips. Pound dollar is currently basically flat. I mean, we got 25 pips on it, but I mean, nothing major there. 25 pips up on the day. Dollar CAD currently up 54 pips. Dollar franc is up 28. Euro yen up only 4 pips. Pound yen up 78. US yen up 41. Gold is down a mere 2 points on the day. Silver is pretty flat as well. Copper moving a little bit down 1% on the day right now. So really not to be a big surprise. Anytime we get a home sales report, a lot of times we do expect some volatility, on the copper. So basically copper will move when there's home sales because home sales affect copper pricing. This sort of makes sense when you put the two together. Let's go ahead and check out a few things on the markets right now. Let's see what we can look at and possibly take advantage of over here. And let me see. Blow this up. One more second right there. I want to look and see if there's anything on gold we might be able to take care of. Let me get a different template. Load it on the chart. There we go. It's a little cleaner and easier for you to read. So I like to get that one up there. And let's go over. Let's start checking out some of our gold contracts to see this where gold's moving right now. Looks like it's edging a little higher at the moment. So we got that in our favor. We'll talk about the news here in a second as well once we get all the pieces put together on what might be some potential trading opportunities for the day. And as always, I go and I pull up the binary scanner, throw it on the screen, see what we got over here. And once that loads up there, we'll go in and look at gold and silver. And we'll make sure we pop up the binary scanner right here. Once we've done that, there we go. Gold, silver, bring this thing on down. And let's update our risk reward over here, 65 to 95. And we'll scroll down, see if there's anything up. Well, we've got a potential silver contract, potential gold contract at 1368. We got a potential silver contract right there at 76.50. So first thing I do is I pull those on up and I get them ready. Okay, just so there is something there. Once I know there's something there, then I'll go over and look at the charts because there's nothing there, no reason to worry about the charts, right? And so I can, right now we just look at two markets because they close right at this time. But sometimes, there's 10, 12 plus markets open at once. And this helps you narrow them down quite a bit. And like I said, after that, I want to go in and once I found everything, I'm going to look at the chart. I'm going to go down to a little bit smaller time frame. And it looks like we might be pushing back up towards the settlement price there on gold. Looks like it's sort of reaching for it. And but like I said, we got that 1368 as one potential trade that we can look at. We also have the 23 on the silver. So let's look at both of those and see which one might be best. Okay, and so that gives us gold. Let's go over. Let's look at silver. And I'll pull out our strike right over here. Okay. And we'll also check out silver as well. Maybe we'll get both of them on there. And right over here, there we go. And now I can look at every chart we got and see if any of them will meet the requirements. Let's see. It's like that's moving up pretty good. It's at 2304 right now, which is, what is that, 10 ticks? So 10 ticks away right there. Right down here at 23. And I can plot that one on there as well right there, right at 23. Okay. And as a potential buy order there. And then what I'll want to do is, basically just monitor that one and make sure that as we get closer to that expiration that will work out well. So we got, it's going to expire here in about 13 minutes. And as always, when I do these trades, I'm always going to be looking to see, if it hits my strike, I get out. That's my, one of my biggest rules right there. And, let's say you got in for, $80 right now. Well, you could also set an exit for, say, 95, because if you got in for 85, you'd be holding it till 100, and that might let you get out a little bit early on the trade without having to be in that, what we call the 2-minute dark zone. Okay? But gold does look like it's moving on up, so I like that one. And silver right now looking pretty good. I'm going to dig a little deeper into it, but, yep, silver looks like it's moving on up as well. So we have, a couple decent potential trades right there, and we'll monitor those. And in the meantime, while they're doing their thing, we'll go ahead and check out the other markets. So let's go ahead right now and let's look at what news came out, okay, and how that's impacted the markets and how the news trades that we talked about yesterday and the day before. I go into them each and every day to give you bits and pieces and details and all that you can use. And let's see, the news we had last night, nothing major. Early this morning, we had the, let's see here. Early this morning, we had a couple things on the pound came out. The big report was existing home sales. But before we move on to that, let's go ahead and just look at the pound, okay? So pound dollar. And right there on pound dollar, we got, let's see here from the report, came out. I always said they were minor impact reports, but we did expect just, a little bit of volatility. Looking for about 20 or 30 pips off those. And right around 430, okay, right here, the ones I told you to look at for about that amount of movement right there. Right around 430, got to move, down? I'll get my ruler. That's a trend line. Grab my ruler right here, right down to about 13 pips, and then back up right here. Total move of 25 pips. So we got about a 25 pip move, high to low, and there's nothing major on that. Then we had the 6 a.m. Report come out right there. That was the CBI industrial order expectations. That number came out, gave us a high number there, about 20 pips. That's pretty common, about usually about what we expect to happen off most of these reports, to a low of about 33 pips from high to low. So nothing major, but it did provide you a little volatility to know when the pound dollar, could be moving. Now let's go in and let's check out the existing home sales reports. Go on over here to euro dollar. Pull that up. And on the euro dollar, we're looking at, let me go through basically each one of these because I had a lot of different plays I was looking at. Well, at 10 a.m., the euro dollar usually moves like half the time. It breaks 50 pips, and its average move is 50 pips. So let's see. Did it keep within that standard this morning? And so we'll go right over here to 10 a.m. Okay, so right before the 10 a.m. release. Right there. And that was our low that we got here at 11:30. Got about 34 pips, so pretty small move. Now, what could you have known to maybe hop out of this trade if you were risking, the goal on the trade would have been to risk, a maximum of about $35 or so. How could you have known? Well, remember I said we're looking for, on the trade, The number was expected to come in at 5.15. So we were really looking for a number of like 5.55 or 4.75 million on the news. Well, the number that we got on the news was 5.39. So it was not basically what we were looking for. I mean, it was stronger dollar. It did what it was supposed to do, but it still, was not wow. And we already know that this is a lower volatility report because only 50% of the time does it break 50 pips. And the average is 50, which means there's a lot that are going to be 25, 35, and a lot that are going to be, like, say, 65, 75. That's why the average comes together at 50 on all of them, even though only half of them actually hit 50, because there's a number of them that will exceed that. So since we know that, then we know we really got to watch that number. That number comes in below the deviation mark that we were looking for, the divergence from the forecast. So we hop out of the trade at break even as fast as possible, and that helps us eliminate our losses, or at least cut them, okay? We were also already pretty far down. We were right here off the half deviation mark. We're coming right up on that 1 deviation level. But you should have been able to get out at pretty close to break even on that trade if you managed your risk and hopped out of the trade. Now, that was just one trade I was looking at. Some other trades, which I don't talk about a lot, is like binary butterflying into the news. And so I went through a few different possibilities. And over here on the dollar yen, if I pull that up, and let's look at the stats on it. It came out right here at 10 o'clock. Okay. We're going to move up about 11 pips. We got to move down of about 11 pips. So we got to move high to low of only 22 pips. So pretty small movement right there. You could have got in at pretty much any time before this and been okay on that. And what we expected was the average range. Now, 0% of the time, in the last 2 years, it basically has not broken, at least not enough to be in the percentage range there, has not broken 50 pips. And the average range is only 40. Well, we stayed within half of that average range. And so what you do is you go and you do a binary butterfly into the news, like say targeting the 11 a.m. expiration. And you go in, you get one that, as it goes down a little bit, you get one. It goes up, you get one. But ideally try to put one on where you can get it about 40 pips wide or so, from high to low. Not 40 pips up, 40 pips down, but just 40 pips high to low. On that trade, then you'd be able to go in and be profitable. Basically, you'd make money on time decay because the market went nowhere at all. By the way, on our gold and silver trades that we bought, you should be able to get out of those at 95, 96 right now if you want to. So if you already had your take profit in there, you ought to be out of those trades. Profitable both expiration premium collection trades on gold and silver. We bought them right around $80, and you can see they're all the way up here at 96 now. So I did pretty well. Sweet, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. Well, we just had a great learning opportunity that happened live in front of us that went really well, so I want to highlight this to you so you can sort of see what I'm talking about. We hopped in a little bit earlier on those trades today, and something I've been playing with is getting in and taking advantage of that first premium collection time there. Went into a little bit more detail on the radio show on that yesterday, so definitely go back and watch the archives of that show if you want to get a little more info on it. But here is what I want you to see. All right, we went in and we bought, let me pull the drawings up over here. Right there. We bought the silver will be greater than 23 contract. Okay? Move that down a little bit right there. And we got into it right about here. Okay? So like right over here, right as it was starting to move up. Well, we bought the contract and we got to get in for $80 on the trade. And I said, hey, let's go ahead and set a take profit 95 because a lot of times we're going for $15 anyway. Why wait until expiration, get stuck in that 2-minute dark zone, thing goes against us, we lose, let's just get out. So set the take profit, got out at $95. Well, silver came in and peaked out right over here. And then look at what happened. In the last 2 minutes, I mean, it just dropped like a rock. So, I mean, 23.08 all the way down to 22.9. I mean, like a point drop. That's just an insane move. And silver does that. Silver is a little nuts. And so I want you to see over here as we go in and we buy the contract. And this is a sort of a good lesson, too, for you to see the volatility in these things. We buy the contract for around $80. Okay? And I could even go in and maybe bring this thing down to like a 1-minute chart. Let's do that on both of them here. There we go. And I guess our enter is a little bit more like right around here. Okay. And then we'll put this right over here. So, and we got in, and we said, let's get out. And look at this. All right, we get out, pretty much at the top, which was nice. Get filled. I just got filled, and then we see the thing fly down. This thing went from a value of $96 to nothing in a matter of like a minute or two. So, one is, man, that would have been a sweet, I wish, right? That would have been a great short trade to go in at 96 and 2 minutes later make $96. But, it's one of those trades that would barely ever actually work if you tried it. But more than anything, this shows you the importance of setting, that if you can go in and you can get, say, $20, $25, $30, setting that, $95 or so take profit order and just hopping out of the trade, why that's so important. Because it can disappear. And some people are like, well, I'm already up so much on the trade. Why get out? Just to grab my last $4 or $5. And there's two reasons. One is this. Because you don't want a winning trade to turn into a losing trade. The second reason is, you're waiting for $4. And now in this case, it doesn't necessarily, but a lot of times it can apply, is you free that capital up so you can go in and take advantage of another trade. Okay? So you want to take advantage of another trade. You can't because your capital is tied up. If you do it with your capital tied up, now you're taking on additional risk on top of that. So you want to go make another $20, $30, $40, but you can't because you're waiting on the last $4. So it doesn't really make sense. So that's why I go in. I want to basically, cost of time. So even though I may be giving up $4, I'm also giving up all the money I could be making in the time I'm waiting on that $4 to take place. So that's another reason. And I have hopped in these things, got in them. They've, moved them, in my favor, taken profit. I've actually had them come back down, got in another one. I've had them hopped in. They've flown up. I took profit. They're still flying up. I got in another one. Still flying up. I got in another one. So I took profit, got in another one, took profit, got in another one, took profit, got in another one, without ever taking on additional risk in the sense of I'm not compounding my risk by adding on another, $80, $80, and now I'm at $240 of risk. So I never had more than $80 of risk because I closed the trade out, took my profit, put another one on, closed that, took my profit, put another one, closed that, took my profit. So, the cost of, just that value you can have in there. So the gold contract still looking good, though it did fall back quite a bit before it pulled back up just now. It came on back, like it went all the way back down there. But it's pulling on back up. It's looking okay. And looks like that was going to go ahead and work out for us as well. Anyway, so hopefully you're learning a couple of new tricks today. Just keep adding them to your list. You get better and better at these trades. Y'all stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And just going through, and we're wrapping up, looking over at this news and seeing what all is going on. Right now, we talked about the existing home sales. They came in at 5.39 over 5.15. We're looking at some of the different plays you could do. A couple of the plays that I really have really been enjoying doing lately that I really like a lot are these butterflies before the news. And so you hop in, before the news report, like 30 minutes before the news. Dollar yen usually doesn't move high to low more than 15 pips. And so we go over here and we find, 930, and so like right about here. And then we measure the high to the low and see, does that stay within about, 15, 20 pips, whatever. And you can look at different markets. We can hop over, look at Aussie dollar. And the way that you're able to do this, this is a little bit, I guess you could say, tricky if you wanted to, but is you don't have to hop in like right at the 30-minute mark, okay? So right here, the report comes out at 10 o'clock. The thing moves down a little bit and starts pulling back up. All right, well, you know that the high to low normally is, say, 15, 20 pips. So really, if we've went from this low, let's say we're up here right now, it's about a 10-pip move. We really don't expect it to move up more than, say 5, maybe 10 more pips at most on this trade. And so that means if we could sell a strike just like right above, maybe 10 pips higher, and 10 pips lower. A lot of people have the sort of the false assumption that they need to sell it, 15, if it's 15 pips high to low, they need to sell 15 pips from where they are at that second higher and 15 pips lower. I'll let it move a little bit so it gives me part of that range instantly. So I know, I'm like, hey, I already got part of the range, so now I can use part of that range to help me put on my trades and go in and do these trades and like I said, looking at for an 11 o'clock expiration in that zone, or 10 o'clock, I'm sorry, 10 o'clock in that zone right there, and it expires right here, and puts on a nice trade. And you can go in for about $15 on both sides. That sounds small, but if you'll risk 15 on both sides, and you get out at 50, well, you could make $30. Okay, 15 plus 15. But if you got out at 50, then you'd lose 35 on one side, but you make 15 on the other. You'd actually only lose $25. So you're looking at making 30, risking 25. And that's a binary butterfly before the news. So it's going to expire right before the news comes out. Binary butterfly into the news is going to expire after the news comes out, but you get in before it, so you get to take advantage of the implied volatility. And then we got our straddle strangles on the news, is when we expect a large move, that we go in and we go both directions on the news, expecting it to break out of a range. So, you can do range-bound trading before news, range-bound trading into news on lower impact events, and you can do strangles on news whenever there's an expectation that it's a large move, because it's usually a large moving news report statistically. And then knowing their stats, it lets you know maybe when you want to get out of that trade as well. And so we have we have one other, it looks like two other potential ones coming up this week that you also could take advantage of. We're going to have a pound dollar one. It's probably going to be the biggest one this week. And that's coming out with the revised secondary GDP. We'll have 4 pound announcements. Average move on this trade is around 70 pips. And it breaks 50 pips 70% of the time. So that's probably going to be your best straddle strangle of the week. We're going to have another straddle strangle, not as impressive, basically almost like a repeat of today. Another home sales report. It's a new home sales report. And so that one's going to come on out at 10 o'clock. And we do the same thing. We got the butterflies before the news. You have the small straddle strangle. And you have the binary butterfly into the news. And we're using different markets. Like dollar yen doesn't move as much. We're going to butterfly that one in. We're going to range bound trade that one into the news. And then we have the ones that move more, such as the euro dollar, so we're going to straddle that one. And if one wins and one loses, it covers the loss of the other. If both win, they're both profitable. Very rarely you can have dollar yen break out and euro dollar stay flat. So that'd be a really rare occurrence that both would lose in that scenario. So anyways, but we'll have that sort of almost a repeat of today, but we get to add in the volatility from the pound dollar with a nice straddle strangle, probably the best straddle strangle all week that we're going to get to do. And let's see, what else do we got? We got the Jackson Hole Symposium. That is going to be coming up. All the big boys and girls of finance and institutions and, all that stuff. Well, most, not all, of them are going to be there. And so just be aware of that. That's coming up. And we got a few things coming up right here. A little bit of stuff about the Fed policy. FOMC meeting minutes are coming out, okay? And so be aware of that for the 2 o'clock announcement. That will probably cause a little bit of volatility after it comes out, because everybody's trying to figure out when is this whole QE thing going to happen, or when is it going to die off. And then the other piece to be aware of on the 2 o'clock announcement coming out here in about 20 minutes, okay, is that you usually get some range-bound markets, leading up to it, because the markets are just waiting to see sort of, what's going to happen. And so just being aware of just little things like that really do help quite a bit going into these reports that, a lot of times you won't have just a massive, massive amount of volatility for the period of, maybe like the hour or so leading up to them. So, you'll see things sort of slow down a little bit. And but we're about to find out. So be very ready when this comes out. This is not the exact same as like the press conferences, obviously, and everything. But nevertheless, just with QE so having everybody so on edge as to when they're going to start scaling that back, which will, they're no longer, basically they're lowering that demand for interest rates, therefore, or lowering the demand for bonds, which can raise the interest rates, which can make credit a little bit harder to come by, and also doesn't, right now, it basically punishes people for putting money in savings accounts and putting them into bonds. And that's the number one advantage of, keeping these rates so low. If the rates stay low, then you're losing money on inflation alone if you don't have your money out there. You're missing out. And so by punishing people for doing that, people are more likely to put their money into riskier assets. But when interest rates do rise, people are more likely to go and start putting their money back in safer assets, and therefore they'll pull a lot of that money out of the market. So that's part of the, the ebb and flow, and that's not a perfect economic analysis, obviously, but it does give you a little bit of it as an insight into how some of the pieces fit together. Okay? So with that on topic right there, let's go ahead and let's hop over. Let's look at just a couple of the indices real quick. We'll go in and we're going to check out the euro dollar. Not the euro dollar. I meant the S&P. Let's grab that one right down there. Let's go ahead and check out the S&P right now. Where is it at? What is it doing? And we had to move on down right there, right down to the half deviation level. Sort of been climbing back up here for the past hour. We've had to move a couple points right on the S&P. And so any kind of positive news, this thing's definitely going to pop back up and going to hit that settlement price. I would be really shocked if it didn't. We'll go on down here. We can check out the Dow. And most of these ought to be painting about the same picture for us. Right down there at the minus 0.5 deviation level as well. If we go in and look at the Russell. And on the Russell right here, we got to move also down 0.5, 0.7, back up to 0.5. Russell's looking like it wants to start heading back up to that settlement now. And it looks like it's trying to lead the way. Let's go ahead and check out the NASDAQ. And right there on the NASDAQ, it's almost back up also. So we're probably going to see the Russell and the NASDAQ hit their settlement prices that fill that gap first, and then the Dow and the S&P will catch up. So that's just a minor little prediction that I'm looking at. There's a lot of ways to play that. So one of the things that you can do is you could go in and let's see here. You have the option. You could go and you could actually look at some strikes. So let's see just what are some ways if you think that it's going to actually go up and fill in that gap. Okay, because we're seeing the broad market index has been heading up for a good chunk of the morning after it opened lower. Is there a way we can put that together? So just demo trade this, that you don't have to go all crazy on it and everything. Just sort of showing you different ways to do some trades. And so right up here, let's say we pull up the S&P, we'll pull up the Dow, and then we'll look at, let's see, the S&P settlement price, 1650. Let's see, is there anything on here we think, now I'm not interested in the 2 o'clock because that's when the announcement comes out, okay? That isn't going to do me any good. So let's get those off the screen. And a little bit more on the time to expiry. There we go. We'll get the buy side only. That's all we're interested in at the moment. And so if you're targeting the 1650 strike, we'll also need to switch this around. There we go. See what comes up. All right, so if you bought the 1650 for $20 on the S&P, at the 3 o'clock expiration, right after the minutes come out, then you could get that for $20 on the 1650. If we come on down a little lower, pardon me, it costs you about $28, and you could only get the 1651 for $4.15. 4 o'clocks aren't open yet. They actually won't be open until after it comes out. So one thing you can do, you can hop in here, and you can put in an order to buy the 1650 contract. If you do that, set an order to get out at 43. So if it gets even close, then you're able to take profit on it. Okay? So that gives you a nice profit potential on the trade right there. And then, let's see, and optionally, let's say you wanted to tier your entries, you could go in and with that tiered entry, you'd be able to maybe take partial profits. So maybe you could take it on half, and then if it really took off, you could really clean up. So there's a lot of different ways you could put that, order together. What about the other one we were looking at? We're looking over there at the Dow, right? So let's check out how would the Dow work if you were to go ahead and implement this on the Dow. I'm expecting, at least there to be a temporary spike. I don't know if the thing's going to go up or down for the rest of the day, but just to fill in that gap, maybe fall right off of it. So, which happens a lot. And so let's go in. Let's look at the Dow. The Dow settled yesterday at 14,985. It's been lagging behind a little bit. So if it were to catch up, what would we be able to look at? We got a 14,984 for $14, okay? And when I say 14, I mean you could be doing 10, 20, 50, you know, whatever. So, and then we got a 14,990. It's a little further than we want, and that's also $25. So if you're expecting to get more of a faster move with this FOMC, you could look at the 14,984. You can put that trade on. Pretty low risk right there where you can do that one. And, you know, just, again, a very simple trade that wouldn't require just a massive unforeseen movement based on the meeting minutes. Now, if you think nothing's going to happen, you can invert this entire trade and you could sell these things. Okay, if you think they're not going to go past that, you can easily sell them. And if you think it's going to be completely volatile and you have absolutely no idea which way it's going to go, you could go in and you could say, you know what, I want to straddle the thing. I want to strangle it, whatever. And so you could put on both directions, and you could go in, you could go lower as well. So if you're going to go lower, then you'd have to figure out what are my target prices going to be. So let's say if we were looking at, let's see with the NASDAQ, we just got a gap fill on it right there with a tick. And it really already has been flying up and down past it all morning anyway. It's been pretty crazy over on NASDAQ. And then we'll check Russell, and then we'll come back to S&P and Dow here in just a minute. Okay. So Russell's moving on up, trying to get on up there. It's only got a few points left to go. We'll see if it can make it. And we got the S&P. Really depends upon these minutes about whether these trades are going to make it. And so the S&P sort of, edging, higher highs, lower lows, or higher lows, higher highs, and edging on up. So what would you be targeting? Well, if you're doing a strangle straddle, I mean, you could go in and maybe look at the 1642, 1638 strikes. Would be pretty reasonable strikes to target on the short side, maybe if you're bearish on the market. But these two areas right here, the 1650 and 1630, 839, that would be the areas that you'd want to be looking at. So if you're long, you're going for at least 1650 on that gap fill. If you're short, you're going for at least 38.75, 1639. If you want to do a strangle, then you could go for both or a straddle. And then if you want to do a butterfly, you could do the opposite. You could go in and basically collect premium on both sides. So it's pretty cool. There's a lot of different ways to put upon, your view of the market, of ways that you can take advantage of it. So if you're neutral, if you have no idea, or if you have a directional bias. And there's a lot of ways to do this too. I mean, you could just do directional, but you could also pay for it. You could do what I call the double binary strategy, right? You could buy an in the money binary to help finance the cost of the out of money one just in case it doesn't make it. So that's something you can do as well. So there's a lot of ways that you can take advantage of these trades. And let's look over at the Dow right here. So right there on the Dow, looks like we'd be doing about the same thing, targeting 14,890 or 14,985. So one of those two would be our targets off of this FOMC. If it is a major event, if there's anything in there that really shakes the markets up. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion shares connect sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DireXionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're going into the final few minutes here before the FOMC minutes comes out. So final minutes before the minutes. And looking on this, and there's a lot of different sites you can look at, sort of see what news, what breaking news is coming out, all that. One of the sites I like to use, it's real simple. It's just a simple data feed. But it's financialjuice.com, and it's just constant streaming of different reports from all over. And just a very, very easy way to find a lot of different things. And so you can go right in here and just sort of see what things are coming out. I watch it right around news especially, because it's basically there's stuff going out faster than you can read the actual minute reports. And so it's got nice quick headlines. So that's something to look at. And right there. So, all right. We are going into this, and we're going to see where these reports end up for our trades. Like I said, we had a couple on there. Hopefully you're demoing them, testing them out, seeing how well they work out for you. Just looking at a simple gap fill play on the markets. If they work out, make a couple $100. Not too bad. And I got about an hour for it to move. So we're going to see how that goes, and just testing out some different possibilities. We usually do get some volatility. So one of the wise things to do before this is potentially to look at tightening up your stops, depending on what kind of risk and how much risk you have on if you're intraday trading at the moment. All right, let's look at a few more things while we're waiting on these minutes to come on out here. They'll be coming out right as the show wraps on up. We'll be passing it on over. But let's go ahead and look at our dollar franc, where we at on the dollar franc right now. We'll go ahead and look at our metals as well, and our energies and our ags. We got dollar franc up about half a deviation, 0.7 down, oscillating right at 0.5 right now. On the dollar CAD, we're sitting right on over at 1 deviation, 1.0449 right there. And by the way, don't forget also, anytime there's a news report like this coming out, you can always check for flat markets, which means premium collection trades. So hopefully maybe a few of you were taking advantage of those going into this 2 p.m. expiration. So, I mean, just look at how, close this is right here on dollar CAD. Just a perfect flat market, hopping right on in there. Had 2 hours and nothing going on. All right? And there's a lot of stuff like that. So as you start to understand the impact of news and how certain news reports, the market will go flat right before it, then that lets you see a lot of opportunities where you can hop in there. Well, let's go in. Let's look at corn. And let's see here. Moving on up. It's pushing to 1 deviation right now. So we're up here at almost 1 deviation on corn. So it looks like it's going to go for that perfect move right there. We'll see if we get it, but it's heading on up right there, 485. And going over here to ZS on ZS, that's soybeans. Soybeans, we're looking at 11.75 right now. And so that's sitting right, literally perfect 1 deviation move. Just great moves right there on the ags. A lot of choppiness throughout the day today, but just a nice solid uptrend move and 2 expectations. Which, by the way, let's say you're hopping in and you're trading soybeans in the morning and that's your thing, you like to do that. If you hop in and you see it's at a deviation first thing on soybeans, that's your clue to not go hog wild, right? Because the move most likely is hit most of its expectation. So just, make sure when you hop in, don't just look right at the chart. Look at where is the price relative to the expected move for the day, and has a lot of that happened already, especially on these ag markets. All right, we all have a great day. Good luck in the markets, and I'll see you tomorrow. Stay tuned for a great show right after this.